Welcome back to Dukascopy TV. Now, since the term was coined in 2008, impact investment has gained tremendous momentum. Joining me in the studio to discuss the point of view from Quadia is Guillaume Taylor and Cheryl Hicks. Guys, thank you very much for coming into the studio today.
Hello, Monica.
Okay. Now, the importance of sustainable banking, Cheryl, if I ask you first of all, it has been increasingly significant over the past few years. Could you perhaps tell us some of the main reasons for this?
Sure. I think one of the reasons is the increased awareness of environmental and social issues which are associated with the term sustainable development, and especially around climate change, for example, and the investments that will be needed in climate change adaptation. So it's become increasingly clear that to have sustainable development has costs and will need investment in the businesses that are addressing sustainability issues, environment and social issues. So I think that because that awareness has been raised, it's also been raised with investors who are seeing market opportunities in those businesses, which Quadia we call significantly impactful businesses, are really addressing really urgent sustainability issues.
Okay. Now, if we talk, Guillaume, about Quadia's portfolio, it's both extensive and also quite diverse. So could you tell us perhaps some of the main success stories?
Well, our last two investments have been going quite well, and it was KKB that we invested. It's our largest investment, and we invested in August 6.5 million francs. It's hydro energy generation, and 2012 has been an excellent year. 2013 is an excellent year as well. A lot of rain and a lot of snow this winter that's helping increase the performance of the hydro electricity generation. And there's also a big market opportunity for energy decentralization. So people feel that more and more of the energy production will be decentralized, and there are a lot of market opportunities in Europe, in France, and Switzerland, and KKB is grasping that market opportunity, or seizing that market opportunity. So they've since we've invested, the revenues have gone up significantly, and margins have increased by over 10%. So we're very happy. And our last investment to date, which was in November last year, was in an organic cosmetic company called Luxit, based in Sweden, and they've had such a success that they weren't able to meet demand. And so thanks to our investment, they've been able to hire or increase the production facility and hire a new CEO and a CFO. CEO is a woman called Satu Anderson, who comes from the hotel industry, but understands the distribution market, and so that's been very, very satisfying for us to see these companies do so well so quickly.
Now, you mentioned cosmetics. I think looking at the portfolio once again, there is cheaper, greener housing, also fair trade nuts and dried fruits. So, as we said, very, very diverse. How do you decide where to invest, Cheryl, if I can put this one to you? Is there one thing which all these businesses have in common, for example, that makes it attractive to Quadia?
Yes. So at Quadia, our philosophy around impact investment is where which are the companies that can have the most significant impact in addressing urgent sustainability issues, as I mentioned earlier. And so there's 9 different areas where we've looked at sort of the international policy agenda around environmental and social issues. What is the international community also decided are urgent issues to be addressed? And these are the areas where investment is needed urgently as well. And so because the policy environment are lining up around these issues, consumers are increasingly demanding different products and services, as is the case with Luxit and organic cosmetics, for example. So what they have in common is they're all addressing what has already been decided by the international community as urgent sustainability issues. And when we look at the companies and we look at how can they, that company in particular, address this issue, we're looking at global sustainability goals and how that company is is able to contribute to those goals, and then we're measuring that impact. So this is the first year that Quadia has put out its own sustainability report, where we've also judged ourselves and our investments based on what impact they're having. As Guillaume said, we've had a successful year of really positive returns from these companies, and what impact are they having on these sustainability issues. So in our impact measurement report, which has just come out this month, we've been able to also tell our investors and the public how our investments are having impact on urgent environmental and social issues.
And those, if I may add, those development objectives, and the companies that are meeting those development objectives are not doing it for regulation purposes. It's not a necessary cost of doing business. It's really an opportunity to grow the business, and that's why we call them. We think that their growth potential is significant, and if the growth potential is significant, the impact will be significant as well.
We see these companies as the future markets. Companies that will be successful in the future will be the companies that have understood that they need to address there's opportunity in addressing environmental and social issues, the most urgent environmental and social issues.
Well, guys, thank you very much for your thoughts today. It's lovely hearing from you, especially that everything's going so well. Now, I'm going to bring us on to our Dukascopy question. Cheryl, you've already answered this one in the past, so I'm going to move on to Guillaume. Now, the Dukascopy question is where we ask our guests, our lovely guests, if they had $1 million US to invest for 1 year, where would you choose to place them? If we look at the board, we have options. We have real estate, equity, bonds, gold, cash, or oil.
Without a doubt, equity.
Equity, okay. So what are your reasons for this, Guillaume?
Well, looking at private equity, when I mean equity, I look at private equity, and what I mean by private equity is financing real assets. So it's providing financing and support, financial support to these assets that are going to create economic development.
Thank you very much. There we go. Very, very interesting once again.
Thank you, Monica.
Well, that's all from us today, but thank you for watching, and please do click back to Dukascopy TV for plenty more interviews and press reviews. Bye for now.